Hello and welcome to Bridging the Gap. My name is Jared Jones, lead advisor and director of investments here at Omega. I'm joined by Lisa Kirschenbauer, the founder and president of Omega Wealth Management here in Arlington, Virginia. How are you, Lisa?
I'm great, Jared. Looking forward to our conversation today. I think we've got some good topics for everybody.
Absolutely. So as the title indicates, this show is all about bringing you different perspectives on money, markets, and life, whether it's through the lens of gender, generation, or political orientation. We hope to inform, educate, and most importantly, entertain you. Today, we're going to talk about three interesting topics. It's becoming more and more clear that some of the trends and fads that came out of Q1 and a little bit before Q1 are starting to kind of blow up. Classic bubble charts we're seeing all over the place with things like Bitcoin, SPACs, and you name it. The next is maybe one of the places that isn't dying down and doesn't look like it's going to slow down anytime soon. That's the housing market. We've got some interesting things to talk about there. And last, a little bit of a shakeup in the oil industry for some of the big players on that front. Lisa is going to talk about some of the things going on there. So in the future, we'll be posting these, and we hope that that gives you the opportunity to reach out to us, comment on what you like. And even if you don't like something, we'd like to hear that too. But it's a good place for us to connect. Be sure to like us on Facebook, LinkedIn, and subscribe on our YouTube channel so you get the most up-to-date announcements from Omega Wealth Management. And now let's go ahead and just jump right in.
Yep, the hot trends, Jared.
So first, the most pressing one I feel like is Bitcoin, at least in my opinion. That is the one that had gained national attention. It was in headlines everywhere. Got up as high as, I think it was 64,000 for one Bitcoin. It got as low last week as 30,000 per Bitcoin. So it has been cut in half. It's kind of gone around, bounced around there, but it's definitely below where it was trading at in April. So that's interesting. The other place to look at are SPACs, which stand for, oh gosh, I'm drawing a blank. Special Purpose Acquisition Company. There it is. So SPACs are, shell companies, for lack of a better term, that would look to buy a non-public company, non-publicly traded company, private company, and if so facto, take them public through a merger. That had been a very popular way for some companies going public, like SoFi, Virgin Galactic, which is Virgin space travel company. So that industry has kind of taken a hit too. It's down 30%. If we look at one of the ETFs that track the SPAC industry. Then there are the collectibles. I guess Bitcoin is kind of like a collectible, but things like NBA Top Shot, which were the non-fungible tokens, if we remember that story, the NFTs, those have also just, fallen off a cliff. They're no longer a thing very much. And it's actually interesting if you read about that. People are getting really, really frustrated trying to get their money out of those ventures. So that's one thing that, most people probably saw coming, but not in the middle of it, not in the middle of the euphoria when it felt like the FOMO was taking place. So there's a lot going on. A lot has changed. The one thing that hasn't changed is the stock market. Stock market is still, holding pretty high. So I think that bodes well, in my opinion, saying that despite all of the dot-com bubble trends that we saw at the beginning of the year, the market has held on to, pretty strong levels near or at records. So what are your thoughts, Lisa?
Yeah, I think some of what's going on with the volatility with Bitcoin, and especially with the SPACs, is, as I will say when I'm home and watching this on the news, is there's a new sheriff in town. And, not only do we have a new administration, but we have a new SEC chief. And especially in the SPAC area, the SEC has woken up and realized that there were a lot of companies trying to basically go public without having to follow the normal initial public offering rules, where they'd have to have accurate disclosure and financials and things like that. And to your point, a lot of these companies that came out through a SPAC are not doing well.
Right.
And had there been better disclosure, you have to wonder whether, investors would have put their, especially small investors. That's where the SEC's focus is, on small investors who can easily lose their shirt in one of these kind of things, because there's no disclosure. They don't really know what they're investing in. It's hot. There's a celebrity behind it. There's a lot of celebrity SPACs. So I think you're going to see the SEC really crack down, for better or worse, for some of our clients, on SPACs. I think the Bitcoin thing, what's interesting to me is how much we allow in this day and age for celebrities, politicians to manipulate our markets. And in this case, Bitcoin with Elon Musk in particular, that's really not okay. And again, I think we're going to see the SEC take a stronger stance on that. And then, Bitcoin is Bitcoin. It's a hot investment. It's speculative. It's volatile. It's been quite a roller coaster. At least in our family, the fact that GameStop came back this week has been a good thing for my sons. So we're recovering a little bit from our earlier adventure. But yeah, I think that some of that has cooled off a little bit. It does still show me that people are grasping at returns. And, you and I both know that it's really slow and steady that wins the race. It's not, for the most part, some quick investment, you make a lot of money, because people don't know when to get out, do they? That's the problem, is that you don't know when to get out. It's hard to get back in. That whole piece of investing is not easy to navigate. And that makes those kind of investments that you were talking about, the hot investments, hard to do well in.
Yeah. Yeah. And I think as far as like Elon Musk and, who have the celebrities, there have always been charlatans out there pushing whatever they wanted to. Even Mark Cuban pushing Dogecoin. I don't know if you saw that,
Right.
But he's a billionaire. He should know, but he's kind of, these are billionaires. They should know better, but the crypto space seems like the wild west right now, similar to the SPAC area. So I think it'll be interesting to see what happens. If you were holding on to Bitcoin and you got scared because it got cut in half, your positions in cryptocurrency are probably a little too big, because this isn't the first time it's gone down that much. It happened right during the beginning of the pandemic. It went from 8,000 to 4,000. Obviously 60,000 to 30,000 are much bigger numbers, but cryptocurrency is still, people are still trying to figure out exactly what it is and how it acts as a financial asset. It's not really correlated at all to the stock market. It's not uncorrelated or perfectly, it doesn't move with the stock. It's a mind of its own, kind of like gold.
Yeah, I mean, it's unreliable as a hedge. It's a speculation, right? And I mean, I think we would normally say any speculative investment, you shouldn't, whether it's an individual stock, whether it's Bitcoin, shouldn't be any more than about 5% of your portfolio, maybe even less if you don't have the risk tolerance for it.
Yeah. So a lot of this might have stems from people being locked up in their homes and the stimmies. How much of this going away do you feel like we could put on, things are opening back up, people are going back to the office? What do you think about that?
Well, people are sort of going back to the office, so I'm not sure we're quite out of it. All I can hope is that people go on vacation and find some other adventure to do rather than messing around on their computer with, Dogecoin, which is not even a real cryptocurrency at all. So, I think it's going to take some time. The stock market is having a good year. One would think there's reason to believe it's going to continue to have a good year, but there's always this sense of, it's why people buy lottery tickets. Like you want to get that quick hit. And we both know that most wealth is built by just saving and investing and keeping your money invested, not getting in and out. So I'm hopeful that some of these trends will die down, but we may not quite be there yet.
Yeah, there is a very distinct difference between gambling, which is like what day trading and trading in and out of cryptocurrency is, and then there is investing, which is for the long term. So yeah. So one thing that has not died, that doesn't look like there's an end in sight, is the hot housing market. It's kind of been a perfect storm with the pandemic, demographics as millennials get to that home buying age, and just a lack of supply for better or worse. Home prices are very high right now compared to where they were 5 years ago. And it's an extremely competitive market. So Zillow came out with a research paper earlier last week, I think at this point, saying that 50% of homes in the US sell in less than 1 week. In the DC area, it's even faster. It's 70% of homes move in less than 1 week. So as a young person who doesn't own a home yet, I wanted to ask you, Lisa, what would you tell someone looking to buy their first home? And also, what would you tell someone that is seeing that their house is elevated in price and are looking, okay, now might be a good time to sell my house?
Yeah, so of course, it's always a little more complicated. I think in the olden days, prior to the pandemic, we would have said, if it's too expensive here, is there another area that's less expensive? But what we found in the pandemic is, Austin, Nashville, all these otherwise cheaper places aren't cheap either. And so, I think it's really tough as a first-time home buyer, of which you want to be. I'm not sure this is a great time to buy. I think if you decide that you're just ready, or maybe you're starting a family and you got to get out of your apartment, I think you may be buying high. So the most important thing is to take a long view, is that you may end up being temporarily in a house that you paid more for than it's worth 5 years from now. So, interest rates are low. Certainly borrowing costs are reasonable, but you've got to take a longer view if you decide to jump into this market, and you have got to be pre-qualified. You cannot just sort of show up. You've got to have your act together, ready to move. Because as we know, houses are getting multiple offers, and you've got to have the financing ready. If you have to do a contingency where you're selling something, that's not going to work either. So
all cash. That's the only thing that gets offers accepted,
yes,
is the all cash, which I've learned isn't necessarily like you show up with bags of cash. It's just waiving the financing, right?
Yeah. Yeah, but if people say all cash, like, what else are you showing up with? Cryptocurrency. So I think, if you're young, then you've got to take a long view right now. And at least you're locking in at pretty low rates that you could feasibly hold for many years to come. But it's a trade-off, and you've just got to be prepared to perhaps either watch the value of the house stagnate, or even maybe short-term take a hit.
Yeah, that's, I've seen a couple of my friends go through the home buying process, and it looks from the outside like an emotional roller coaster. Like there's so much emotion that goes into making an offer, and then you find out there are 30 other offers and you didn't get it, and you've already envisioned yourself living in that house, right? So it's just a terrible thing. So my fiance Lauren and I were like, we're gonna wait. Maybe prices won't come down, but hopefully it's less competitive 2 years or a year from now. We'll see.
Yeah, I think, Jared, that's true, because I think part of what this is sort of the coming out of the pandemic, that you've got boomers who just aren't quite ready. They've been holed up working from home in their homes, probably just done a bunch of renovations so they're comfortable with it. And right this moment, they're not ready to declutter and get the heck out of their house. And that's creating the supply problem, which is then creating this price craziness. And so, yeah, I would hope that in a couple of years that we would start to see the supply loosen up a little bit. You definitely don't want to be building a house right now. That's one of the things I'd say.
Yeah, but in a lot of places, that's really your only option.
If you can't, except that you can't even get your house built, and the materials, they won't even quote you a price until they can get their hands on the material, like the builder, because they're going up so quickly. I mean, lumber's up, 75% or something ridiculous like that since last year. It's
At one point it was up 300%.
Yeah, it's just crazy.
I do think there is value in waiting, though. If there are smarter people than me that have run the math numbers to find what point is like the break even that you need to stay in a house to where it makes sense to purchase a home, it's 7 years.
Wow.
So that's one thing I talk to with our younger clients a lot is, can you envision yourself staying in this home for at least 7 years? So that's one kind of rule of thumb out there. And then, thinking about longer term, a lot of people buy starter homes. You can run some numbers to see, okay, would it make sense to save as much as I possibly can for another 5 years and maybe get a nicer home than I would be able to afford that I stay in even longer? So I think there is some real value in waiting.
Well, I think as we were talking before we started the show today, what's trickier, and this is more for some of our baby boomer clients who've decided they didn't like their home in the pandemic and they want to sell. But they don't want to leave the area, right? So they're selling and buying in the same area. And I got to say, I think that's tough. I think what we would tend to recommend if you're willing to do a double move is to sell, take your proceeds and rent and see if things soften up and not try to buy into this market. For all the reasons you were just talking about it, how long are you really going to be in this new home? 7 years? If you're not, then maybe you're better off renting. And, a lot of people think, we talk to clients. Yeah, we both talk to clients all the time about renting versus buying. And there's this in America, there's this stigma about renting. And yet in so many other countries, people rent and they have cash at the bank and they have investments, traditional stock and bond investments, but real estate is not an investment. And yet in this country, it's like this sacrosanct thing, but the math doesn't always work.
Yeah, real estate, if you look at it with all the cost involved, taxes, insurance, maintenance, upkeep, it's not a great investment. There are much better investments out there, but you're right. The US has incentivized home ownership and it's become a part of our culture. So I think that's a lot. My parents are asking, when are you going to buy a home? And that's probably what they heard from their parents too.
Yeah.
So let's get on to the last topic.
Yeah.
Everybody's favorite topic these days. It's gaining huge popularity. The ESG, environmental, social responsibility, and corporate governance movement. There was some news that came out about the oil companies today. So why don't you tell us what happened, Lisa?
Yeah, I think in this week, it was just sort of a triple whammy for the biggest oil companies in the world, Exxon, Chevron, and Shell. They are fossil fuel companies, but they are getting swept up in what is not just a fad, but a global corporate movement to try to get companies to meet certain standards on this environmental, social responsibility and corporate governance theme. And I know some people think it's a fad. I know some people think it's like some political movement, but this has been going on for a long time, and I think the concern around climate change is getting bigger and bigger. And what some people believe is if we cannot get the big oil companies to really be part of the solution on climate change, nobody's going to meet the Paris Accord goals. It's not going to happen. There's just no way. So there were a variety of things that happened all at once this week. Exxon was fighting a battle with a really small investor called Engine Number One. It's a venture capital, I think, company who has a very small holding in Exxon, but got this movement going to replace at least two. Actually, they had put up 4 board members who would be more responsive to forcing Exxon to somehow start making shifts in how they are generating energy, which up until now has been primarily, of course, fossil fuel. And they got 2 board seats for sure. There seems to be question about whether they're going to get any other ones. The Exxon CEO today was like, all right, we're looking forward to sharing our plans. It didn't sound like he was really willing to listen to them. And I think what he's going to find is that shareholders are increasingly going to be pushing companies, not just like the oil companies, but other companies that have a big global footprint, carbon footprint, to start to figure out how they're going to make changes. In the other two cases, Chevron and Shell, Shell is being pushed by its shareholders to make some, just radical changes in how they generate energy in literally not even 10 years. And at twice the percentage that Shell was willing to commit to. And then similar kind of pushes at Chevron, although of those three oil companies, Chevron is probably the most committed at this point to making this change in how they generate energy. And, we were talking about this before. They cannot see themselves. They need to start to reframe themselves as energy companies, not as oil companies. Now that is going to drastically change them as an investment because, we've got plenty of clients who have oil stocks they inherited from their mother or dad or grandma or grandpa or whatever, and it's always had a great dividend. And that's why you kept it, even though you and I know, if you look at the long-term returns against the S&P 500, these stocks have been underperforming for years now, but they had this dividend. Which everyone needs to remember, when the share price goes down, the dividend looks more attractive. It's just math, right? But now, I think we're going to have a big shakeup in these, I'm going to start calling them energy companies. And if they don't respond, I think you're going to start seeing shareholders voting with their feet and getting out of them. And then there's the whole class of people who have a value focus on this, like they don't want to be invested in polluters. So you've got both the economic push and then the value push. So this was huge news. And you had mentioned that what finally tipped the whole thing, I think, over the edge was BlackRock, which is just a huge asset management company, investment company, that is very much committed to ESG principles in their investment offerings. And they're not some fly-by-night kind of organization. They really believe climate change is a problem. And they are putting the pressure now on these companies, which they have holdings in, to start making changes. So I think we're going to see more and more of this. This is not going to be a fad. To your point, the first topic we talked about, this is not a fad. This is a trend that will be playing itself out in all kinds of places in the investment arena.
Yeah, it's really been gaining momentum more than
Yes.
anything. It's not like it's not like Bitcoin that comes and goes and comes and goes. It's definitely here to stay, I think. And like you said, I think the real story here is the private sector has started saying, we're not going to wait around for public policymakers to get going on this. We've seen it, look, the infrastructure deal is a perfect example. We might not get it in this fiscal year. It looks like they might wait till 2022 after the September 30th deadline to do reconciliation. It looks like. And a lot of green stuff is wrapped up in that for the US. So I think it's a good thing seeing private companies pushing to make some important changes and progress, especially from a young person's perspective. Like, it's climate change is a real thing. I don't think there's a debate there anymore. And there might be, I don't know. It seems like it's pretty settled, but I think it's good to see some real progress and push towards.
Well, and I think, if you're investing in a company these days, you have to wonder how they are mitigating that risk. It is a risk. They need to have risk management around this. If they are not addressing it for their company, you have to think twice about whether you should be invested there. I was sharing with you that our local power company, Dominion, used to have Dominion Electric. They don't call themselves Dominion Electric. They call themselves Dominion Virginia Energy or Dominion Energy. Mm-hmm. They are, in 2026, they are going to have built the largest offshore wind turbine farm in the country. They're clearly just moving ahead. They're not waiting for, to your point, public policy. They realize this is the smart way to go. Their customers want it, and they know that they've got to make a shift. And it's getting cheaper and cheaper for solar and wind anyway, so it becomes more cost effective. It's really a corporate governance decision at that point. It's not just climate change. So yeah, I think we're going to see more of this. Stay tuned. We'll have to see what other sectors are impacted.
Yeah, for sure. It might be a PR thing where you have to change I don't think oil's going away anytime soon. We still have airplanes and cars and all that stuff that uses oil, but what are you doing? I think that's an important question.
Yeah, you got to have a plan. And if you don't have a plan, I think that's where you'll get in trouble. You can have a long-term plan, but you got to have something. And, another time we'll have to talk about the big polluter cryptocurrency, right? I mean, that's a whole other issue that
that's what really dropped the market was Elon Musk saying Tesla's not doing it because it's a polluter. So that was interesting.
Yeah, except that, of course, they're holding a whole bunch of cryptocurrency in the Tesla treasury. So whatever.
Supposedly, right? I don't know. Well, that's a good place to wrap things up, I think. Thanks, everyone, for watching. Again, go ahead and subscribe to our YouTube channel and reach out with any feedback or questions, comments you have for us. Thanks for tuning in.
Take care.